Hey everyone, welcome back. One of the coaches of Ungar Academy here, and this is our usual chat we have on the weekends about the market trends. Before we start though, I invite you as usual to please subscribe to our channel and click on the bell to stay updated on the release of all our new videos, and also please leave us a like. We'd really appreciate it. Thank you. Hi, we are the Ungar Academy, and we teach traders how to make money in the markets. Our founder, Andrea Ungar, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. So this was a really very hectic week for the markets, obviously due to the conflict between the Ukraine and Russia. And this week was characterized by very high volatility on all markets, especially on commodities. Not so much on the American stock indexes, but the European markets suffered a lot more. So let's go in order and start off with the indexes themselves. Right now we see the Nasdaq, which is losing 2.3% 5 days. The mini S&P is doing a little bit better, about negative 1.8%. As you can see, however, the European stock exchanges have lost around 8, almost 9% over the last week, precisely because they are closer to the conflict zone, and therefore there's greater tension on these markets. The volatility on the short term is really very high, and you can also see it from the standard deviation chart. So we're really on very high levels, both on a monthly basis and on a yearly basis. And this is obviously just a temporary situation, and so from here to the market close, well, anything could really happen. If we take a look at the American stock indexes, in particular the mini S&P 500, the situation appears less dramatic than we might expect. It is true that here we can see high values of historical volatility, but on the whole, if we compare the trend of the last 2 weeks with what's happening in the real world, the drop of these markets has been quite moderate, especially if compared to the commodity markets. Let's now turn to the bonds. Let's look at the returns on the T-bond, which corresponds to 3.38%. Also, the American Treasury, the 10-year bond, is doing well, 1.84%. The European Bund, no, didn't fare as well. Obviously, when there are high tensions on the stock indexes, like in the week we've seen, it is quite normal to see the bonds market go up because it serves somewhat like a safe haven for investors. But now let's turn to the possibly most problematic sector of all, energy. So as you can see, all the energy futures have risen dramatically this week. I mean, specifically, we've got heating oil growing by 30%, 23% for crude oil, and 19% for gasoline. Natural gas, instead, is a bit further back and gains only 9%. Obviously, this is the American natural gas, because if we look at what's happening in Europe, we have a completely different picture. This is the European natural gas. Now look at the upswing from the start of the war until today. The entire metal sector has also gone up. In this chart, we see silver rising by 6% this week, 8% for copper, while gold and platinum are a little further back. However, the entire metal sector, which also serves as a safe haven asset, has risen due to the conflict. The meat market is the only possibly negative market this week. I mean, soft commodities also rose, in particular sugar and orange juice. Finally, let's move on to the market that is probably the most affected one, along with the energy sector, and that's the cereals market. Let's look at wheat, which is on its all-time highs now. It's been suspended at the moment. Here it is for a limit up, so an excess of gains. Actually, in 5 days, it rose by 40%. Corn also went up a lot, while soy derivatives went up a little less. Finally, let's take a look at the currencies, where we also see some very important movements. Here's the euro-dollar future. As you can see, during the week it fell to 1.09. A week ago it was around 1.12, so it really went down a lot in just 1 week. Finally, we have the cryptocurrency market, rebounding slightly by 4.5%, but remaining more or less at the levels that we've seen in recent months. The state of the markets is indeed very volatile. Between now and the closing, the overall picture could almost be turned upside down. For the sake of completeness, let's also take a look at implied volatility and its term structure, which is currently in backwardation. We have quite high VIX values, around 34. So there is starting to be a fair amount of concern among traders. Until now, the volatility market had shown signs of uncertainty and fear, but at the moment, the situation is getting worse. And although we aren't witnessing a real panic yet, we need to closely monitor the markets because the picture could change very quickly indeed. So my advice is to use caution, use common sense. This is a particular situation, and above all, I'm referring to those trades involving volatility derivatives or options. So options selling, because this is certainly not the ideal time to go short selling and take excessive risks. Let's move on to the rollover calendar. We're still far away from the third Friday of the month, but you know that the American futures are rolled a week in advance. So next Friday, it will be possible to roll over on the American stock indexes and also a few days in advance on the VIX future. Finally, guys, for those of you who want to learn more about systematic trading and understand a little bit better about what it consists of, I'll leave a link in the description of this video. You will find it very useful. There's a presentation from our founder, Andrea Unger, introducing you to this world and just so much more. But before saying goodbye, I kindly ask you to leave us a like if you enjoyed this video and subscribe to our channel. Thanks so much, and we'll see you next week. Bye-bye.